a brand new show that just dropped. While the presenters play dominoes, a special guest will be discussing all topics that matter to you. Everything from judicial, legal, health, wealth. Nothing is off topic. The name, you ask me? Domino Effect. Domino Effect. Come listen. It's time well spent. Welcome back to the Domino Effect Show, your favorite show. Please remember to like, subscribe, and share. The links are below. So, this evening, we are having a conversation with Tina Masiello, who is a CPA, also runs a business, which is Masiello
Accounting Services, LLC. It's Masiello Accounting, ACCOUNTING.com if you're looking for further information.
Awesome. Thank you so much for doing that. We're once again with Sweet Will and the Padre.
Hello.
So let's get into it. We're going to be playing some dominoes and continuing with your questions regarding taxes and everything to do with the IRS. So my first question for you, Tina, is
actually, before you do anything,
what's up?
How do we know Tina?
Oh, perfect. So Tina used to serve on the board of the Worcester Youth Soccer League, and she also used to be one of the coaches. We met Tina because our sons play soccer together on the travel team. So I think we've known you, Tina, now for 10 years.
God. Yeah, probably close to 10 years.
Yeah, it's been that long.
We'll continue to know each other because our sons
are going to the same college. Exactly,
Wow.
exactly.
Yeah.
So Tina
I'm
is
stuck with
family.
them.
Absolutely. I've been
Now
adopted.
you see why I want
Which
to
I
be
love.
adopted by the.
I've already been adopted. What are you talking
because of the
about?
meatballs and the tomato sauce.
Yeah.
We'll have to come do that.
So, on the heels of our previous conversation, my question has to do with the death of a spouse. So, my husband has died. Now
No,
what?
wait.
Oh, man.
No, whoa.
They killed off this dude.
Yeah, I know. Whoa.
Listen!
No, we're not doing this. No, we're not doing this. I'm alive and well, people. She's like, it's assumption.
Okay, we're saying in the case of hypothetically,
Okay, now
my
you're
husband
talking.
has died.
died.
So now what?
Right. Hypothetically, her husband has passed. What you're going to want to do, again, is consult your accountant or CPA. However, what you're going to want to keep in mind is that for the year that your spouse passes, you are still allowed to file married filing jointly. So whether Padre passes January 1st or December 31st, you still get to claim as if he were alive the entire year. It would be the next year. The next year would be the year that things are going to change for you. Depending on your situation, if you have young children, you can claim surviving spouse, head of household, or you're going to claim single, depending on what happens.
On the heels of that, I have a question. So, my spouse, are taxes more lenient for married couples? Or are they more lenient for singles? Because typically what I used to do on my taxes is married, but withhold at the singles rate.
That's a very good question. Generally, the tax system favors married filing jointly. Also, the other filing status is single, and head of household is for someone who has a child under the age of 19. You can claim head of household. These give you better what we call standard deductions, so you're allowed to claim more tax-free income depending on the standard deduction for that year.
Okay.
Married filing separately is generally not the best option. I know I do have a lot of clients who will ask me if filing separately versus jointly is more beneficial. Generally, when you file separately, the IRS does take a lot of the credits away from you. So 90% of the time, it's more beneficial for you to file jointly. There are some occasions where spouses are going through separation that maybe they do want to file separately, or if one spouse has a back tax problem and they don't want to be held accountable for their other spouse's taxes, they may file separately so that they don't have to worry about their refund being confiscated from the IRS.
Okay.
All right, I got to. My question is.
Make sure it's very, very important.
It's extremely important.
No,
So-
it's truly important.
Exactly. So let's say I have a grandmother at home that I'm taking care of. Now, can I claim her on my taxes? That's one question. The second question is, so let's say my brother has 10 kids. He's already gapped out at 3 kids, claiming 3 kids. Can I claim his other kids? Like, can I claim like 2 of his kids?
Again, good questions. We'll start with your grandmother. So as long as you're paying for her living situation or her daily expenses, 50%, you can claim her as a dependent.
Okay.
Now, as far as your brother's kids or cousins or whomever, legally, again, it has to be more than 50% of their living expenses. So if you're not paying for 50% of their living expenses, then you cannot claim them as a dependent. Your brother or whomever would claim all of their children if they have 3 or 10 or however many. The good news about the child tax credit is it is refundable. So even if it does cover some of the taxes owed, you'll still get money back on top of that for every child that you have.
Okay. Well, that's a good point. Can I claim my dog on my taxes?
I think that's a good question, especially because now we all treat our dogs as children.
Yes, yes.
I'd love to be able to claim my dog. I have one at home as well, and my cat. Unfortunately, I cannot. The only instance where you would be able to claim your dog or the expenses related to your dog is if your dog was engaged in some sort of work, like a service
like if they were
dog,
doing
or they were doing
commercials.
commercials or something like that, then you would be able to claim, like, you had a Facebook page for your dog and you make money off of it, you're going to be able to claim, like, things like
So
that.
emotional
Support
Support
animals, would you be
not,
able to?
you can't claim that either.
No.
But they're working though.
But wait. But if you purchased an emotional support animal,
Can you claim that?
can you claim that?
So
Especially
that's
if you have
where-
a disability.
Yeah, so that's where things get a little bit the gray
Complicated.
area. Yeah, you definitely want to talk to a tax professional and talk about your tax situation. Has your doctor prescribed this? Is this medically necessary? And then you get into things like medical expenses, which is a total separate deduction. So you just want to talk with your tax professional to make sure that you are following the general rules and that, things look okay and kosher, because if you are audited, the penalties and interest on that is just not fun to deal with.
Okay.
Now, this question is for the Haitian community.
Don't look
If
at
I'm
her.
taking
Look at
care-
not the camera.
Yes.
Since you be.
If if I'm taking care of my family in Haiti, can I claim that on taxes?
I think it's your turn.
Like half of my money is going towards taking care of them. Can I
So
claim
there
some
are
of that?
general rules for claiming dependents, and usually one of them is that they have to be a U.S. citizen. So you'd want to check and make sure that they're U.S. citizens and that they're U.S. residents. And if they're not, then that's where you're going to want to consult your tax professional and just make sure that things are in
So
line.
not just if they have a social security number.
Not just if they have a social security number. Again, you're going to want to follow the guidelines of, are you paying 50% or more of their living expenses? Are they U.S. citizens? Are they children of yours? Are they not children of yours? There are different categories for different dependents. So yeah, you'll want to go through that with them. But generally, when you're just sending the money over to help other family members, usually not tax deductible. But again, everybody's tax situation is different, and I don't want to tell you no when there is a possibility that there are situations that indeed you could claim a relative
Okay.
I have two questions.
You do. I have one. I have
Child
a hot
support.
one.
Can you claim that?
Ah, good one. Okay, so generally child support is not claimable. However,
The poor guy paid 30%.
I know.
But I think the
Child
person
group? Say that
receiving it gets to claim it, gets to put it in because they ask you, don't they?
so they will ask you for reporting purposes. However, it's not tax. So if, say, for instance, Mark was ordered, was ordered to pay child support
No,
to
say
you.
to the guy to the other side. Let's say if I ordered to see the guy over there.
Or vice versa.
Yeah, if I had
The
to
guy
pay
on my
him child
right,
support,
the
yeah.
guy on my right over there,
yeah.
you can say that.
So, okay.
It would not be taxable to the recipient, and it would not be tax deductible to the person actually paying it.
Okay.
However, if you were married and you're ordered to pay alimony, and it is in your separation or your divorce agreement, it could potentially be taxable to the person receiving it and tax deductible to
For
the person paying
paying
it.
it. Okay, because that was going
Child
to be the
support,
other question.
no.
you so
Alimony,
No, because the,
potentially yes.
whoever's getting the child support gets to claim the kid, so they still make money off the kid.
What does it sound
Why
like?
does
What
it
does
sound
have to
like
be
you're making
off
a
the
case
kid?
for that? Like, for real. No, let's move to my question.
No, I'm saying how come he's not getting anything, no tax cut or anything
Nothing
like that.
when he's paying.
But the person is like, yo, you using these kids, you still getting money when you claiming taxes for them. So
Well,
you still
that's
get
not
something.
like a personal problem.
Are you talking about somebody you know?
I know, so, yes.
So there are situations where I have seen couples where they split custody 50-50 and
Okay.
one person does pay child support to the other. And there will be in the agreement where 1 year parent A claims the child and 1 year parent B claims the child, and they hand off years
Oh,
to make
okay.
it fair.
Okay.
So I have seen
That's
in
if
the,
that separation is
and you have to have
yeah.
the
standing.
50-50 custody.
You know, sometimes,
so.
Lord.
So now my question is this. You know how we have all of these marijuana, cannabis companies in Worcester? You have a client who comes to you and they purchase cannabis. They have a prescription, but it is legal in Massachusetts. So they have a prescription and they've been purchasing cannabis. Can they claim the taxes that they've had to pay on the cannabis?
So they're not going to claim the taxes. They're going to claim the prescription part. The prescription is a medical deduction. So in the tax system, you get a standard deduction depending on your filing status. That's a general amount. The IRS just says, hey, we're not going to charge you taxes on the first. For married, it might be, I think it's around $26,000 to $28,000. But there are instances where what we call itemized deductions are more than the standard deduction. And say you have medical bills that are approaching $50,000. What's more beneficial for you, the first $28,000 or the first $50,000 of your income tax-free? First 50. So you're going to want to itemize. So things like medical expenses, real estate taxes paid, mortgage interest paid, charitable deductions, local and state taxes paid. You can add those all together to what we call an itemized deduction. And if that equals more than the standard deduction, then you can take whichever one is larger.
Okay.
So if you have a prescription for medical marijuana and you're spending a lot more than what your standard deduction is for your filing status, keep your receipts and talk to your CPA and or accountant.
All right.
Okay.
Before I ask the question,
my
it's your
turn?
turn.
Okay.
Now, you're not gonna win this time on this table. I'm just letting you know that. Okay. Now,
They've been making it tough.
my question
It's
is,
looking hard this time.
in our she passed. Good. In our Haitian community, there's a lot of nurses. Can they claim their uniforms?
You're reading my mind.
Well, hey, I mean, you just want to know.
Yeah, so back in the day, you used to be able to claim certain job-related expenses, which were like uniforms, or if you had to pay union dues. A lot of the nurses had to pay union dues as well. However, with the Tax Cut Job Act, they did away with that.
Okay.
So you no longer get to deduct that from your expenses. It wasn't a lot anyways. It had to meet a certain threshold. I think it was like 2%. Anything over 2% of your income you could claim as an itemized deduction. The only way you would be able to claim things like scrubs or things like that now would be, again, if you were self-employed.
Okay.
but most of the nurses are employed by some sort of agency or a hospital, a thing like that, and you're a W-2 employee. So no, nothing would be generally tax deductible.
Okay, so it's your turn. Now, one of the things that both of you brought up was the LLC. So, is it best for someone to, if someone with a business, to register the business as an LLC? And what are the tax implications?
I think this is a different story.
Listen.
Question.
We need to talk about.
Listen, question is a question. Can't I ask a question?
So that's a good question. Whose turn is it, by the way?
Yours.
Okay. So the thing to remember in LLC is, I think a lot of people think that it's some sort of extra filing status that you get with the IRS. It's just a limited liability company. So you're basically, if you have a small business and it's just you by yourself, you have an option to deduct, or I should say report all of your business income on your personal income tax return. With an LLC, you're going to do the same thing if you're still a single owner, sole proprietorship. The LLC says, okay, if something were to happen in this business and someone were to sue me, you can't touch my personal stuff. Whereas if you don't have an LLC,
They can't go after you.
there are instances where they could go after your personal stuff if you have lots of other assets. So an LLC is always good to establish when you have a small business. However, it's something that maybe you want to talk with a business lawyer, sometimes a tax accountant. I'm not really versed in business law, so I'm not going to be able to give you advice on that instance. But it is definitely something to look into and think about.
Okay.
Okay. Your turn.
Okay, your turn.
My turn again? Wow.
Yeah, you passed. Remember?
Yeah, I passed at one point.
I passed.
You pass?
Yep.
What about you, Sweet Will? You passed too?
Yep. Now, here's my. I have this
Your
question.
I gotta pass.
I think Patricia has all the games, so
I do?
yeah.
What you got, Sweet
I
Will? You
passed.
pass as well.
I pass.
So I noticed whenever we fill out the taxes, they ask you a question about enrolling.
Go ahead.
Enrolling.
You're happy because she played that.
Enrolling.
Go ahead. Oh my goodness. Enough with the laughter. He wins.
I said we're not supposed to allow Tina to win. Point
government,
yes. Okay,
Tina.
I win with a double 5. How good is that? I win. Now,
What did you have? Oh, he got you.
Yeah.
so I've been waiting for
Great
that.
work.
I know that she has a lot of them. So the question is, Roth IRA, they normally, I noticed that when you fill in your taxes, they ask you, would you like to donate or whatever? Would you like to open, or do you have one or something like that, right?
Okay, so yeah, you're talking
what
about.
is the purpose of that? I mean, what's the point of that question?
Yep. So you're probably talking about TurboTax, and they probably ask you that question because your IRA is going to be a tax deduction normally, with the
Okay.
exception of a Roth IRA, because Roth IRAs you're contributing after tax money. IRAs you're contributing before tax money. So say you contribute $3,000 a year to your IRA, either with your job or outside of your job.
Okay.
You can deduct the $3,000 from your taxable income. Your job generally will deduct it for you on your W-2 and not include it in your taxable income. But Roth IRAs are great. You actually contribute to them after tax dollars. So when you pull out the money when you retire, you're not paying any income taxes on them. Whereas regular IRAs, the traditional IRAs, you don't pay taxes now, so you have to pay taxes later when you retire.
Okay. I'm going to touch upon something I think it's kind of broad, but it's probably needed. With the creation of, what was the app that we used to?
Robinhood.
With my good friend over there, that was a big fan of
Dogecoin and all those.
Oh my God.
So
I'm still a big fan.
what advice can you actually give us? Because I noticed that there was supposedly there was a new fee or some extra tax fee that was added. I don't know. I maybe I heard something like that regarding.
Yeah, I think you're talking about cryptocurrency in
Yeah.
general,
Yes.
and cryptocurrency is still like a muddy water situation. I think the IRS is still trying to figure out how to handle that, as well as the other companies that you go through, like Robinhood and things like that, are trying to figure out how to report that, because normally when you have a security, you have the cost basis, what you paid the security for.
Me.
Maybe you paid $2 for the security, and then you sold it for $6. So your profit is what? $4. With cryptocurrency, there's mining, and the actual cost of the cryptocurrency can sometimes fluctuate. It's, again, something you're going to want to talk to your tax accountant or your CPA about. It's still an ever-evolving situation with cryptocurrency. I, for one, don't like it. It makes my job a lot harder, but there's money to be made, so
gotta make
I
the
can't
money.
knock
Yep.
it either.
No, I get it.
So one of the things
My turn?
that, in a lot of communities, you'll get someone that will turn around and say, or they'll say to you, oh, you should go to so-and-so to file your taxes because they're going to help you make a lot of money. Are there loopholes that people can apply in order to make money?
Yeah. So I think, I'm going to answer your question, I guess, in various parts. I want to let the community know that if you ever are referred to a tax professional who is going to charge you based on the amount of refund that they're going to get you, meaning you come to me and I say, okay, if I get you $600 back, I want $60 of your refund. That's something to be wary of. As a tax professional, you should not be charged based on the amount of money that you can
gonna
get
get
back from a person. For a person, my fee is a flat fee, regardless of whether you get $10,000 back or you owe $10,000. I'm not going to charge you any differently based on your tax refund or tax liability. The other part of your question is, you want to go to someone who knows what they're doing, because the tax law is, a book like this, and the more you know, the more you're going to be aware of the different loopholes, as they call it, or areas where you might be able to claim a tax deduction where someone might not know about it. So there are some instances where someone could be more knowledgeable, and it is better to go with that person because they know more what they're doing. But it should never be a situation where it's like, oh, go to this person because they are going to guarantee you
Money.
at least X back, or whatever the situation is. It should be, this person knows what they're doing, they know their stuff, they're going to get you every deduction and things like that, they're going to look into your tax situation, and that's why you want to go with them. My turn again.
Yes.
Will, it sounds like you had
You had a
something to say, but
question.
you kind of like swallowed it.
Yeah, you had a question and I think you've forgotten it.
Forgotten
You
it.
want me to run it for you? So let me run it back for you. So the question that Sweet Will had was, when you're filling out your W-4 for them to send you that W-2, at the end of the day, is it better for you to owe the IRS or to get a refund back? Because when you get a refund back, his wife was having a conversation with him and said that a refund is like an overpayment. So it's better for you to owe than for you to be getting a refund back. What are your thoughts on that?
I like this question a lot. I get this a lot. Generally, what people will say, I hear this a lot from my clients, they say, I don't want a refund because that is considered interest-free loan that I have given the government, and that's not fair. I want some money for you keeping extra money. What you want to, with that being said, what you want to do is come as close to zero as possible. That's the goal when it comes to tax situations. I don't want a refund, and I don't want to owe at the end of the year, because Yes, if you owe, like you said, it's a tax-free loan. Maybe the government is giving me this time, but they only give you up to a certain amount before they say, now your tax-free loan, we want penalties and interest because you did not pay what I think you should have paid during the year. It's also important to note that the tax system is a pay-as-you-go system. So maybe, I see this a lot. I have a lot of clients who have a small business. They're operating all year. They're doing really well. At the year end comes, they turn a profit. Maybe they've made $50,000 that year. Great. Tax bill comes in. It's maybe $10,000, $15,000. Now the IRS says, well, hey, you should have paid that during the year. You should have made quarterly payments because we want the money as you earn it. We don't want it all at the end of the year. Your W-2, as you get paid, what do? They take your taxes out every week or every other week, paying it as you go, as you earn it. My small businesses, we forget about that. I need to pay as I earn it. So it's important to pay your quarterly taxes so that you don't get penalized during the end of the year, because now your $15,000 tax bill now goes up to $20,000. You've just given the federal government $5,000 extra that you didn't need to. So, good questions.
See, you could have asked that question earlier. But no, you needed to wait. I don't get it, dude. I really don't get you.
So, what are some tips that you could give to our viewers in terms of tax preparation, tax filing, etc.?
Some general tips I give my clients are to assess yourself as the year goes on. I think most people think tax season, January. I get my W-2 in, it's time to visit the tax guy, lady, person, whatever you want to call it. Things come up during the year that can dramatically change your tax situation, and you don't want to come to year end and say, oh my gosh, this is a very large tax bill. Think about things like major life changes. I'm getting a divorce. I'm selling my home. I'm buying a home. I'm starting a business. I'm closing a business. Things like that. Major life events. I had a child. Someone passed away in my family. We just talked about that. Those are all times where you want to call your tax professional and talk to them and assess where you're at, so that when January comes, you're not underwater and going, oh my God, how did I get here?
Okay. So another thing, one of our pastors used to say this. He used to say that his sister is the shortest member of the family, but she brought the family the most help. What happened?
I just
here?
closed the game. I got
just
6.
closed
I
the
got
game?
8 points.
I've got 7.
I got a lot.
So I got 9. So basically, he said that his sister was the shortest person, but she brought the most gain to the family, and the reason is because she was born December 31st.
That is true.
So if you as a parent give birth to a child on December 31st, that next tax year, are you able to claim that child fully?
Yes. So if your child is born, say, December 31st, 2022, since we're in 2023, come 2020, you know what, let me back up. Say they're born December 31st, 2023, and we're going into next filing season. So for 2023, you would get to claim it as they were your child the entire year. So you get a child tax credit.
Look at this.
Whether they were born
say that
January
face.
30th.
Run that back!
Wait, so that kid, say that again.
So my wife just gave birth December 31st, 2023. What happens for tax
next
filing
year,
2024?
When you file your
2024,
taxes.
when you file your 2023 returns, which is January 1st to December 31st, you get to claim a child.
You
get a
just
child
claim
tax
him
Yes,
for the year.
whole year.
the year, even though they were born at the end of the year.
Look at
Okay.
his face.
It ends up being the same amount because you
Yeah,
claim
because
the
you
child for
still
17
next
years.
year. Yeah.
Exactly.
So
So
when your older
kinda
child
like,
at
yes.
January 1st and
Yeah.
you're like at the 17th year, you're like, wait, my child just turned 17. Why don't I get the child tax credit? Well, it doesn't matter because you got them for the whole
That was
year.
my. That was
the
gonna be.
Well, no, that's not my question because you had asked a question and you said that there was a limit to the number of dependents.
Yeah, there's
So does that mean if somebody truly has 10 kids, I come from a family of 10, I'm the baby of 10. So meaning my parents couldn't have gotten the tax credit for all 10 kids?
No, you can get the tax credit for all 10 kids.
Depends on the age.
Holy moly.
Exactly.
Exactly.
Yes.
She
You
just
age
said
out
that.
at 17.
So it depends on the
age
age,
out
but
of
you can still get the credit for all.
Correct.
Yo,
Well,
these
not all
Haitians,
10.
yo.
But not all 10. No, shit,
What about them?
What about the Haitians?
They were making up stories, bro. Like,
Yeah, because I thought that there was a limitation
The
of
gap,
3.
yeah, I thought
because
there
that's
was a
what you
gap for
said.
3,
So
yeah.
that's why I'm like,
so
let me
yeah, I
ask
thought
the
there was a
question.
gap. When it comes to 3 kids, and if you have like 4 or 5 kids, you only get credit for 3 kids. The other ones you lose. So that's why a lot of people, what they do is they're trying to
They split their
they
kids,
split
like
their
they'll
kids
give them
somebody,
up to another
somebody else
relative to
or
claim
something
them.
like that.
That's how
yeah.
you needed to describe it before.
Yeah, I thought that's what you were gonna do, so that's why I'm like expounding
That might be
on
an
your
older tax
question.
law that they're referring to.
Ah.
Forget to
But they
subscribe,
still,
people.
but they're still working. But they probably still working that law. So,
Wow.
alright.
They're still working.
So
that
you don't
hard.
need to split kids anymore.
No.
No splitting kids.
Do
That's
you,
what's
you
up.
hear that? You heard
So
it
you can
here
claim all 10 kids
from Tina
as yours.
Masiello.
So now you
if
got- now
you
that-
have 7 children, you can claim
You're
the
gonna wanna
tax
claim
credit
the
for all 7
7
children.
children.
You don't need to pass them off to a relative to claim them. You can claim them
Probably
yourself.
shouldn't.
Yeah, that's definitely a no-no. Do not do that. Do not do that. But wow, that's awesome. This is like great
right.
information. So, where are your offices located?
So my office is located at 324 Grove Street in Worcester, Massachusetts. I'm a seasonal employee, so generally I'm around tax season, but you can call me any time of year and I can help you with your tax situation.
Okay, and what is your phone number?
My phone number is 774-253-0552. And if you want more information, it's masielloaccounting.com.
Awesome. What else do we have?
No,
Hey, come on, spin the
I
game.
didn't
Spin the
win.
game. She
Any
hasn't
other
won
games?
yet.
Yeah. Second half.
It's about time. It's about time. We can't have people come in here and win on this table, guys. Okay?
So you mentioned something about the tax credit that I'd like to go back and visit. So in terms of, I think I'm gonna have to make an appointment.
I think so.
to
Sounds
talk
like
to
you are.
Yeah, I'm
'Cause
gonna
this
have
is
to make
our
an
last
appointment.
game. We're gonna have to do it and head out.
Okay, we are. So everyone, thank you so much for watching. Please remember to like, subscribe, and share. The links are below. And we thank you so very much for coming out and taking the time to play with us and to answer our questions. This has been very informative. So
It was.
you. Thank
You're
you
more
for
than
coming.
welcome.
Thank you.
You're welcome to come back anytime.
I
Thank you,
love it.
fellas, for having me at the table. And I
Thank
hope
you.
to see you soon. Thank you, everyone.
Bye.
Bye.